On July 14th, Lucid stock crashed 57% in a single day, the worst one-day drop in the company's history. In minutes, the stock went from $5.51 to $2.37, an all-time low. But underneath that crash, something nobody's talking about is quietly forming. Here's the tell. The cost to borrow this stock, what short sellers pay just to stay short, dropped from 360% down to 318%. And short sellers already bought back roughly 1.09 million shares. That's short covering. And it usually shows up right before a squeeze, not after. Now, quick disclaimer, because I want to be straight with you. What I'm about to say is entirely my own personal read. It is not a fact. It is not guaranteed. It is my thesis. If Lucid holds $7.18, this could flip into a full short squeeze. And the report that triggered all of this, it just destroyed thousands of investors in a way most people still don't understand. And if you were in a leveraged fund on this stock, there is no getting that money back. None. Here's my conclusion right now, before anything else. Lucid is sitting on the single most important technical line of the year. The day after the crash, the CEO fired back hard, and the stock ripped about 29% in a single session. The next day, it climbed another 12%, 2 straight days of recovery, and the chart backs it up. Lucid already broke above its 50-day moving average, sitting around $5.80. The next wall is the 100-day moving average, sitting up near $7.33. That's the resistance level that matters most right now. Short term, I'm watching $6.98, then $7.57 as the next targets if momentum holds. Again, my personal read, not a promise. But circling back to that $7.18 line I mentioned, that's still my personal squeeze thesis, nothing more. Hold that line, and short sellers get forced to buy back their positions. That's the scenario I'm watching. Here's why this video matters. Break this down the right way, and next time a rumor-driven crash hits your screen, you will already know how to separate the opportunity from the trap. My name is Moon. I obsess over one thing: where money actually moves and why. If headlines like this one usually send you into panic-selling mode before you even check the facts, hit subscribe, and if this helps, drop a like. There's an assumption everyone makes. A company hires a restructuring firm. It means the company is dying. Here's the thing, though. That assumption is just wrong. The restructuring firm involved here handles everything from full bankruptcy management to basic operational consulting. It's a wide spectrum, not one outcome. Lucid's new CEO took over on June 1st and immediately ran the deepest leadership overhaul in the company's history. New CFO, new CTO, the works. So calling in outside consultants was not a sinking ship throwing cargo overboard. It was a new captain inspecting the vessel. On July 14th alone, Lucid traded over 155 million shares, several times the normal volume. That kind of volume doesn't come from scared retail traders alone. That's institutions and algorithms moving at the same time. And here's the part almost nobody's talking about. A 2x leveraged Lucid ETF got completely wiped out that same day. The fund tracked double Lucid's daily return through a swap agreement. When Lucid dropped more than 50% in one day, the swap counterparty had the contractual right to terminate the position immediately. The fund's net asset value went negative. It got delisted from NASDAQ. And here's why that matters. If you were in that fund, your money is gone, whether Lucid bounces back or not. This was the first forced termination of a U.S. listed 2x single stock ETF this year. So, who's actually moving the market right now? 3 groups. The company's communications chief went on record calling the bankruptcy report completely false. The restructuring firm confirmed it never recommended bankruptcy to management or the board. The company reported roughly $4.7 billion in pro forma liquidity as of the first quarter, and analysts say that's enough runway to carry operations well into next year. Here's what people don't get. The moment that liquidity number is verified, the bankruptcy story loses its statistical footing. And remember that short covering number from the top of this video, roughly 1.09 million shares bought back. That's the third group. Short sellers are already repositioning. Now let's talk about what actually caused this. One blog post did all of this. An EV-focused outlet cited two anonymous sources claiming the restructuring firm had recommended bankruptcy or a take-private deal to the board. That single report forced NASDAQ to halt trading on the stock multiple times that day. Think about that for a second. The outlet got a headline, investors got the bill, and the people in leveraged products, the ones chasing double returns. One bad report, and their entire principal was gone. The fund issuer said this exact risk was disclosed in the prospectus. A decline over 50% in one day could let the swap counterparty terminate the position, no exceptions. So, legally, even if the report turns out to be completely false, there is no path back for the people already liquidated. None. The market is that brutal. Being proven wrong later doesn't undo a forced liquidation today. So, what do you actually do with this? 4 things, fast. 1. Watch $7.18 on a closing basis. That's my personal first confirmation point for the squeeze thesis, not a guarantee. 2. Mark August 4th on your calendar. That earnings call tells you exactly how fast cash is burning and whether the liquidity story holds up. 3. Leveraged products are one-day trading tools, not directional bets. Hold one past a day and the entire risk structure changes on you. 4. Never size a position bigger than you can afford to lose. This liquidation proved the market doesn't care how confident you are. I know what you're thinking. It already ran 29%, then 12%. Am I too late? Fair question. But a short squeeze signal only confirms itself after the bounce has already started. And remember, that's my read, not a fact. Right now, the stock still hasn't fully recovered to pre-crash levels, and that 100-day moving average near $7.33 is still sitting well above current price. So it's not too late. It's undecided. Those are two very different things. So here's where we land. One false report liquidated real money permanently. And in that same wreckage, the money that checked the facts is already starting to move back in. $7.18. August 4th. Remember those two. And remember, the 718 line is still my personal call, not a promise. Come back to this channel when they hit. I track money flow like this, fact and opinion clearly separated, every single week. If you want to learn this with me, subscribe, and if today helped, hit like. Protect and grow what you've built.